By now, everyone knows that homebuyers are holding back in hopes of improving affordability. There were only 55,000 single family homes that went into contract this week. That's historically low. If I'm a potential buyer, chances are I'm waiting to buy. Maybe I can buy when mortgage rates fall, or maybe I'll be ready to pounce with cash when home prices fall. Home prices must fall, right? So that's the conventional wisdom. But then the question is, if demand for homes at these prices has fallen, why haven't home prices fallen to meet demand? The short answer is that so far, demand is low, but supply is low too. So we find ourselves with a supply demand balance sufficient to keep a floor on home prices. So let's look at the US housing market data for the week of October 23rd, 2023. And I'll show you what I mean. At Altos Research, we track every home for sale in the country every week. We track all the pricing, all the supply and demand, all the changes in that data so that you can see it immediately as it happens. We make that data available to you far before you see it in the traditional channels. I'm Mike Simonsen. I'm the founder of Altos, and here's the data for the week. The active inventory of homes on the market grew again this week by 1.5% to 554,000 single-family homes on the market. This is now just 3% fewer homes on the market now than last year at this time. Inventory continues to grow now faster than it did last year. Last year, October 28 was the peak of inventory for the year because mortgage rates had exploded higher. Rates have jumped again this year, and we're on a similar pattern of inventory growth late in the year. It's going to be fascinating to see if inventory keeps climbing into November. Part of me thinks that it'll probably top out in the next week or two because home sellers withdraw any stale listings over the holidays and then relist them again in January after the new year. So I've highlighted the dark red line here to show you the inventory trend for 2023. It's just under the bright red line from last year. But since this year's inventory growth hasn't yet slowed, we could surpass last year's count in November, sometime in the next few weeks. Inventory growth is from home buyers holding back, waiting for affordability to improve. I want to make sure, though, that to point out that while unsold inventory is growing, this is not from sellers flooding the market. This dynamic is important to pay attention to because, home prices are high, affordability is low, and demand is low. On the surface, you might expect that these tough conditions would force home prices down. You might expect that home prices are going to crash or that assume that they are falling now. But it turns out that a real market correction takes declining demand coupled with rising supply. And we just don't have the supply half of that equation. This is an illustration of new listings volume each week. These are the unsold new listings each week. So these are the ones adding to inventory. See the dark red, the dashed line here for all of 2023 has been below previous years, fewer sellers than previous years. This week, there were only 57,000 new listings unsold. We just have very, very few sellers. Declining home prices probably require that supply and demand imbalance. And what we have is really a balance. There's a balance between low demand and low supply. It's important to remember that there aren't any factors leading sellers to come to market. In other words, there's no indication anywhere in the data of that inventory will approach even the pre-pandemic years, let alone crisis levels of imbalance. Inventory levels now in the country are still 40% fewer than even in 2019. Only really Austin, Texas has more inventory than recent years. Much of the Midwest and Northeast has available inventory levels that are still at the pandemic lows. Last year at this time, we started modeling how 2023 could end up with significantly more inventory. At the time, we were maybe expecting recession to bring more sellers to the market. That didn't happen at all. So now maybe recession happens in 2024. But as of right now, there is no indication of any surge of sellers, no investors or distressed homeowners who are rushing to sell their homes. There's none. So we'll report those changes as soon as they happen, but they're not here yet. We watch this data each week to see if an imbalance between buyers and sellers forms. Right now, the balance is what is clear. So that's the supply side of the equation. Meanwhile, we can measure demand trends by looking at the rate of the newly pending transactions each week. This week, there are only 325,000 single-family homes in the contract pending phase. There were 55,000 new pendings this week. Last year saw 343,000 pendings with 54,000 new. So actually 1,000 more sales and more new pendings this week than last year at this time. A few more, slightly more. That may be surprising, but last year the sales rate was falling precipitously. This year the decline is slower. So there are now only 6% fewer homes pending than a year ago. So that's the closest we've been to last year's sales rate all year. And even though there is no sales growth happening, by December, we could actually have more sales in the pipeline than we did in December 2022. And you can see that trend in this chart. The height of each bar here is the total number of single-family homes in the contract pending stage. The light portion of the bar are the new pendings each week. And last year, the light portion was shrinking quickly each week. This year is slow, but not slowing like last year. The takeaway here with the pendings is that home buyer demand is historically weak, but we don't measure any precipitous further drop in demand, even with mortgage rates over 8%. So this is another indicator of this supply-demand balance that this market is kind of in right now. The homes that are on the market, of course, are getting fewer offers, and so sellers have to cut their price. So we can use price reductions to see that supply-demand balance is slowly tilting in favor of supply. So now 38.5% of the homes on the market have taken a price reduction recently. That's more than normal for this time of year, of course, and it's still increasing each week. Last year, the price pressure was even more negative, though, with 42.5% of the homes having taken a price cut. Last year, the supply-demand equation was less balanced. So that means that while there is some bearish indicators for home sales prices that will close in December or January, it's actually not that bearish for home prices yet. The indicators. If you anticipate that home buyer demand will continue to deteriorate, this is the leading indicator to watch. Do price cuts get over 40% in the next few weeks? They very well could. And so then what happens to them over the holidays and into January will be the next time to watch. Looking at home prices specifically, the median price of single-family homes in the U.S. now is $435,000. We can see the balance I've been talking about in home prices each week. So it's still kind of shocking to me to see that home prices managed 2023 as an up year, but that's where we are. Home prices will end 2023 a couple percent gain over last year, 2022. Last year at this time, we were paying attention to the demand side of the equation, and it looked like home prices would have to decline in 2023, although it never looked like a huge decline, but just paying attention to the demand side last year, that's what it looked like. Now, as we're looking at 2024, we can see how much home prices, how much that move will depend on the volatile mortgage rates. If rates happen to fall from 8% to maybe in the 6s, that will spur the demand side of our equation, and much do that much more than the supply side. So the active inventory will fall and prices will likely climb. If mortgage rates stay, for example, in the eights or head higher, that'll clamp down on demand. Active inventory will climb, price cuts will climb, and the end of the year will come maybe with home prices having dipped. And so it really depends on where rates go from here. The median price of the new listings has not fallen much this autumn. This is also a little bit surprising, but it's another indicator of the balance, that balance between supply and demand where we are right now. This week, the median price of the new listings, the newly listed single-family homes, is $394,900. That's the bright red line here, and it's moving horizontally now. It's at the far right end of the chart. So where last year at this time, the new listings were reacting to the imbalance and adjusting lower very quickly. By this measure, home prices are 2.5% higher than last year at this time. When we look at where the price of the homes going into contract, we can see that ticking lower. Now, this is seasonal, partly seasonal. The homes that sell this late in the year do so at a discount, but it's also something to keep our eyes on as mortgage rates stay over 8%. And we want to watch to see how precarious that balance is between supply and demand. The median price of the homes that went into contract this week was $365,000. That's down 1% from last week and 2.5% higher than last year at this time. That's the dark red line on this chart. This view of the pendings is useful because it's the closest proxy for the sales that will close in November and December. So what we know is that the headlines reporting home sales prices will continue to report year-over-year gains because those sales that'll happen in November, December are already in contract now. It is worth watching the dark red line here for signals of imbalance creeping in. Last year, you see that the contract prices took big steps down very quickly when those imbalances occurred. That can always happen again, even if there is no current signal that such a price change is imminent. Right now, you can see the dark red line bouncing along lower for the fall at the right end of this chart. Watch after the holidays, how quickly does that change? In January this year, mortgage rates were dropping from that November peak, and that spurred demand, not enough supply, and that pushed contract prices higher to get us to where we are today. What happens this January if we don't get that fortunate turn? What if rates have pushed higher into January? Well, you'll see the impact on homebuyer price points right here. There's so much signal in the active market, and these conditions now change so quickly in this post-pandemic world. The signals are balanced right now, but they can change fast. And so if you need to help buyers and sellers understand the housing market, they probably don't understand what this balanced market means. They need help with the data, and they need it from you. So go to altosresearch.com, book a free consult with our team. We'll help you talk about the data, learn how to talk about the market with your clients, your prospects today. There's a link in the description below to join us. So click that, join us, get a demo with Altos, and we'll be back next week.